Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you're new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Apple, Spotify, or Google, please leave a 5-star rating. This content is brought to you by Uphold, which makes crypto investing easy. You can buy, sell, and earn crypto on Uphold. I've been using this platform since 2017. They have 10 plus million users, 200 plus cryptocurrencies, and they're available in 150 countries. As with all exchanges, you can buy and sell on them, but I highly recommend you custody your own crypto, not your keys, not your crypto. If you'd like to learn more about Uphold, please visit the link in the description. All right, my friends, the big news of the day, BlockFi has officially filed for Chapter 11 bankruptcy. This is a sad day. I hate to see crypto companies like this go down, and whether it be out of mismanagement or the contagion of FTX. And we know BlockFi was heavily connected to FTX. They were taking a line of credit, but BlockFi is a business, they were having issues for a while. That's hence why they needed that line of credit from FTX. And the SEC didn't make things, any better. They fined BlockFi for $100 million last year. And this really sucks. They should have fought the SEC, but this is the end of it. And Mario Nafal kind of put it in a really great way. He tweeted out, "This is a day many of us expected, but it's the end of an era for the lending and yield earning platform that had previously been able to survive, or so it seemed, the same fates as Voyager and Celsius." So rest in peace, Voyager, rest in peace, Celsius, rest in peace, BlockFi. And once again, guys, I'm not happy about this. It really sucks. I wish things didn't happen this way, but there was some mismanagement at some of these companies. They did not do things well. But some of it is the contagion of FTX as well. So Mario says, BlockFi lists its estimated assets and liabilities to be in the range of $1 billion to $10 billion. This is per the court filing. They said in preparation for these Chapter 11 cases, BlockFi took steps to liquidate certain of its owned cryptocurrency to bolster available cash to fund its business and administrative costs. Through this process, BlockFi was able to raise $238.6 million of additional cash for a total unencumbered cash position as of the petition date of $256.5 million. So my hope, guys, is that the users who have their funds stuck on BlockFi are able to recover some of that, as BlockFi has liquidated their own crypto holdings. But let's see, these bankruptcy proceedings and processes can sometimes take years, and sometimes you get, pennies on the dollar, so to speak. So once again, I'm not happy about this. This sucks. And I think this could further put pressure on the price of Bitcoin and send Bitcoin lower. Now, in my interview with crypto analyst and trader Garrett Soloway, just about 10 days ago, he was calling for a $10,000, $9,000 Bitcoin price. And we'll see if that happens. Bitcoin may not go as low as $10,000, $9,000. But it could go lower than it is right now. So we are still near the bottom if we haven't hit it already. This is about probabilities. I think, sometimes people want certainties. They want to know what is the exact bottom, what price? Well, nobody can tell you that because we don't have a time machine. We can't predict the future, but we can look at the range. We can look at the zone, and we are certainly in the bottom zone, which is a accumulation buy zone, right? That's what I've been doing, buying the dip. Not financial advice. Do your own research, please. But these things, these black swan events, are certainly going to serve as catalysts to drive the price down. So BlockFi owes FTX US $275 million and the SEC $30 million. Now, Stuart Alderoty, general counsel at Ripple, weighed in on this situation. And as it relates to the SEC, because the SEC is in the mix of this, right? First, they fined BlockFi $100 million. Any company, you take $100 million out of their pocket, especially like a startup like BlockFi, you're going to hurt them. And also, Gary Gensler met with Sam Bankman-Fried and FTX officials and did not investigate them to see what they were doing, what was going on in the Bahamas. we talked about how the political donations really blinded a lot of the regulators and politicians instead of doing their due diligence. So Stuart said, another SEC regulation by enforcement success story, being sarcastic, of course. He said, months after the $100 million BlockFi/SEC deal, BlockFi is in bankruptcy. $275 million loan outstanding to FTX from BlockFi, unknown amounts owned to BlockFi from FTX, nothing ever registered, fines paid, with whose money, consumers decimated. Of course, all under the watch of SEC Chair Gary Gensler, who continues to fail. And this is pathetic. And here, Fred Rispoli, who's also an attorney, and he often talks about crypto and the Ripple case and so forth. He said, don't forget the SEC lawyer who was on the team suing you that left midway through to join BlockFi. And then 100 million fine with SEC happened. And then FTX connection. And then ex-SEC attorney left BlockFi. Just the connections, the movement of people here. So it's like this SEC lawyer brokered on both sides, fined BlockFi, then moved on to BlockFi to help broker $100 million fee. I don't know what to say about these things, right? And I'm a big believer where there's smoke, there's fire. So there's something here. I'm not a conspiracy theorist, but I look at facts and you just see things and it's like, the things that make you go, something does not seem right there, right? You do a gut check and it's like, yeah, that seems fishy. So the SEC is going to be under a lot of scrutiny. Watch what the Republicans who are in the House, who are part of the committee to oversee the SEC, watch what they're going to do to Gary Gensler and the SEC. Now, Attorney Jeremy Hogan weighed in on this, what Stuart had to say, and he said, SEC investor protection plan. And he puts out a list here. 1, drive crypto exchange offshore. 2, punish U.S.-based company with large fine. 3, U.S. company seeks line of credit from offshore exchange to pay fine. 4, offshore exchange collapses. 5, both companies go under. Did I miss anything? Once again, all of this under the SEC's watch. They're supposed to be protecting retail investors. It's pathetic what the SEC is doing. It's pathetic what Gary Gensler is doing. He needs to be kicked out of there, and they need to put Hester Peirce in as the chairman. Now, here's some other news that's coming out about this FTX debacle, guys. Cryptocurrency exchange FTX reportedly asked local banks in the Bahamas now to put their money in the exchange for a respectable return, a Wall Street Journal article explained. Oh, my God. This is crazy. And this is being reported by the Nassau Guardian. So once again, Bahamas reporting or news outlet here. Man, I think that there's still more here. And remember, Sam Bankman-Fried, this Wednesday, this man is speaking at a New York Times event. I can't believe what the hell is happening. He should be under criminal investigation. He should be extradited to the United States. And they need to start criminal investigations. And look, I tried to interview Sam Bankman-Fried before this collapse. I was in contact with him and his people, and he's did something wrong here. He needs to pay the penalty, right? Do the crime, you got to pay the time. Now, speaking of Bahamas, so yesterday on their Facebook page and I believe their website, the Attorney General and Minister of Legal Affairs held a kind of press conference talking about FTX, and it was titled National Address on Behalf of the Government of the Bahamas on the Developments of FTX. So let me give you the takeaways. I'm not going to play the full clip here for you guys, but here's what he had to say. So he said, FTX digital markets is regulated in the Bahamas, but Alameda Research is not. Very interesting. Active civil and criminal investigations into FTX are ongoing. Bahamas Securities Commission acted quickly in its response to FTX. Bahamas Attorney General says it is extremely regrettable FTX's new CEO misrepresented action taken by the Bahamian regulators. Here's a quote. It is possible that the prospect of multi-million-dollar legal and consultant fees is driving both their legal strategy and their intemperate statements. So they're trying to coming out and saying that, hey, the new CEO, the guy who oversaw the Enron crash and so forth, he is wrong here. I don't think he's wrong because from the outside, we can clearly see there's a lot happening here. And the Bahamas folks did not do their job well. But to be fair, it's not entirely on them because here you have FTX had a U.S. arm, and Sam Bankman-Fried was in D.C., not in Bahamas lobbying. He was in D.C. lobbying. Yes, he was working at the Bahamas, but him and his people were in D.C. lobbying regulators and politicians. And of course, there was the U.S. arm called FTX US. They were buying marketing in the U.S., right? They had the naming rights for the Miami Heat arena. They had a Super Bowl ad, and they had Tom Brady, Steph Curry, and these people. They weren't marketing to the Bahamian people, right? Don't get me wrong. Bahamas, they got to do a better job. But the onus is on the SEC in the US. So he's also said, I am fully confident that as matters progress and the activities of the FTX group are either reconstructed or wound down, the Bahamas will emerge held in even higher esteem. Okay, we'll see about that. Bahamas Attorney General says he is shocked at the ignorance of those who assert that FTX came to the Bahamas because they did not want to submit to regulatory scrutiny. Bahamas Attorney General, we believe you. Yeah, there's a reason why Sam was not in Silicon Valley or in Miami, Florida, or wherever else, right? He was down in the Bahamas while trying to go to DC to lobby to get regulations. So, they're going to put out their dog and pony show to try to protect their reputation, so to speak, right? But let's see. I don't think the Bahamas folks have much to lose here. It's more the U.S. regulators, I think. Now, while all this is happening, my friends, Fidelity, the powerhouse with trillions of dollars of assets under management, with the huge brand, legacy brand, and millions of customers, they have officially opened retail crypto trading accounts. Now, we talked about this news at the beginning of November, where they were going to launch commission-free crypto trading, specifically for Bitcoin and Ethereum. And they have officially done it. And, I tweeted about it and I said it before. I think this FTX debacle opens the door for the legacy traditional financial players to come in, take a hold of crypto and own it. Previously, it was the startups, your Coinbases and all these exchanges, right? Your FTXs, right? That were driving the marketing, driving people on their platforms. Now, these big players with whatever limited crypto regulations they have, and of course, we're waiting for the full shebang, they're starting to set up shop. They're building the on and off ramps. And what do we know about them? They have the regulations from the traditional financial world, not fully crypto, but they have the infrastructure and some of the traditional financial regulations which will help them. They can come out and say, hey, forget about those crypto exchange startups. We've been around for 50 years. We've been around 100 years. We have insurance. We're regulated. You've trusted us with traditional financial investments like stocks and ETFs. Come buy crypto from us. Pretty straightforward, right? That's going to be, I think, the marketing. That's going to be the positioning. So Fidelity, big player jumping in. And remember, we talked about BlackRock jumping in, BNY Mellon crypto custody. So all these are traditional financial players. I think they're chomping at the bit. They're licking their lips here. They're ready, salivating, ready to come take the market share that where these big folks like BlockFi and FTX and so forth are collapsing. So don't be surprised, my friends, that these big players come in. Now that's a double-edged sword. It's going to bring more money, more awareness, more credibility to the market, but these big institutions we've seen historically have manipulated assets. right? You look at gold and what JP Morgan has done to gold and silver and so forth, but it is what it is. I've said time and time again, I'm here to make money. I'm going to ride this wave and the multiple waves, I should say, in the bull markets and make my money. So I have financial freedom. My family has financial freedom because we're still, pretty early relative to other markets and, in the history of other markets. So I'm positioning myself for future bull markets. I made money in the last bull market. I made money in 2017. And I'm once again, taking a position and waiting out the bear market. It's going to be tough. It's going to be tough. We got macro and economic issues, the Fed raising rates and all that, recession. But it's if you just listen to guys like Warren Buffett and what they talk about with patience when it comes to investing, really help you to understand how to have a macro outlook on the markets. Finally, guys. Once again, this is despite everything that we were talking about, bankruptcies, FTX collapse, and so forth, people are still joining the crypto market. So we're talking about Time Magazine now. President Keith Grossman joins crypto payment startup MoonPay. Grossman announced via Twitter that he is to become MoonPay president of enterprise following a 3.5-year tenure as Time's president, So we're seeing the migration of talent from the traditional finance world, as well as media and so forth, people coming, even regulators, government officials going to crypto because they all see what's on the horizon. This is the next layer on top of the internet. It's here to stay, despite all the issues that's happening. But it is here to stay, and it's only going to grow. We're seeing, if you zoom out macro level, there's more people holding Bitcoin and crypto now. There's more people using crypto. There's more people building. There's more, new technologies like NFTs and DeFi and so forth versus when Bitcoin first started, right? So when you look at that adoption curve, that S curve, you're seeing adoption, you're seeing growth. And that's what's important. That data does not lie. And once again, we're having problems, obviously, right? But it's a bear market. And as Warren Buffett says, when the tide goes out, that's when you see who's swimming naked. So, but people will still continue to invest and build and do their thing because this thing is here to stay. This technology is here to stay. So big news here. Once again, I'm not happy about this BlockFi news. And I think, once again, it could send the prices down. So just be prepared. That's not a guarantee. That's not a certainty. But you have to be prepared for all scenarios as an investor. So in my mind, I think there's a high probability the prices go down. Bitcoin goes down, drags the alts with it. That's fine. We're in the bottoming zone. It will bottom out. And I think sometime next year, you guys have seen my squiggly line trading view chart that I've been sharing for months, right? My squiggly line just showing that if we see some sort of rally like what we saw in 2019 after the 2018 bear market, we could see Bitcoin run up to, your 40,000s or so by May, June, July, maybe that period. And, and also follow. But that does not mean we're going to all-time highs. I think the all-time highs come in 2024 into 2025. So you got to have patience. My plan is, just so you guys know, I am going to take some profits in the rally that's going to happen next year. Obviously, I have my long-term hold bag. And then when the price is correct after that rally, I will be dollar cost averaging again and stocking up for that next bull market run. And yes, we're talking years here. We're not talking hours, days, weeks, or months. So please, you got to have a macro outlook. I can't stress that enough. When I learned that, when people mentored me about that, that's what helped me to make money and to not move by emotions and to understand the market cycles that are playing out. Like right now, look, the Fed is destroying everything, right? Raising rates. So you can't fight the Fed. So just heads up, guys, I'm sharing this knowledge that has helped me make money, and I hope it's eye-opening. I hope it's like a eureka moment for some of you, like, oh, okay, I get it, right? Forget about the herd, forget about mainstream headlines. What do the charts say? How has the market cycles played out? That's what you got to look at, my friends. And you got to, look, I'm not some great trader or technical analyst, but there's many out there like Blockchain Backer, Alessio Rastani, and so forth. I follow all those guys, and I take all of their different thesis, Garrett Soloway and so forth. I take their thesis and then I put it all together and I look at what has the highest probability of playing out. And I also keep in mind, hey, each of them are maybe bringing different scenarios to the table. And I need to consider all of those scenarios because I don't know what the future holds, and markets sometimes are irrational. But one thing's for sure is that we've seen how the cycles have played out. And while they may not be exactly the same, and how they play out, it's like history doesn't repeat, but it does rhyme, right? They're very similar in how they play out, while they may not be exact, carbon copies. So anyway, guys, hope this is helpful. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button, share this video, and I'll talk to you all later.